Good morning, everybody. It's Tuesday, October 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 3 at 405 and a quarter. November soybeans were down 9 and a quarter at 986 and 3/4. And December Chicago wheat was down 3.5 at 581 and 3/4. We are through 10 of 23 settlements for the harvest price discovery for crop insurance. Corn's currently sitting at 422. Soybeans are at 1028. This morning we had CONAB out of South America release some crop estimates, and we're going to talk about those here in just a minute. We've got a little bit of rain going through southern parts of Brazil. By all estimations, forecast still holding strong. That return to the wet season looks to be shaping up for the kind of 10 to 14 day outlook down there. So bumping up against harvest pressure here. We got weak markets. Dustin, maybe touch on CONAB here a little bit to get us started, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, CONAB came out. Numbers are kind of similar in line for acres as the USDA was projecting them to have. I think that let's look at beans, for example, 47.33 million hectares with total production at 166 million metric tons. When you look at like last year's production, it definitely dwarfs last year's production, 153. It's just kind of a reminder that we're continuing to see increases in acreage down there. The USDA, though, however, has been projecting them at 169 million metric tons for a forward balance sheet. So it's not like this number is a huge surprise from what the USDA has been writing down for 24-25. And the same goes for corn as well. They have less production for corn than the USDA is writing down. Markets, I think, are in part negative from this, but also probably a lot of it has to do with the rising U.S. dollar index and ongoing harvest pressure, as you mentioned. We did see that December 24 contract trade below the 50-day moving average overnight as well.
Yeah, and a couple of late announcements here just flashed across the wires. We've got two export sales announcements out this morning: 131,000 metric tons of soybeans to China. That's for 24. Also announced 120,000 metric tons of soft red winter wheat to Mexico, also for 24. So we're back in business at the USDA here this morning, given yesterday's holiday. We're going to get crop progress and conditions here this afternoon. They're looking at numbers here this morning, in the 30% range or so for corn and 47% for beans. But I think where you're going to see that pop is next week. We should be significantly higher from a progress standpoint, given the window that these guys have. And Jason kind of alluded to it yesterday, as fast as they're moving kind of the northern part of Illinois, that's kind of carrying off throughout the whole belt. Any other grain related thoughts here this morning, Jace, on your side?
No, I mean, I think outsides are having a big influence on our markets, right? I mean, we saw funds cover lead this rally a lot. If you look at a crude oil chart, Dan, you mentioned this morning, it was down $3. It's making a bad trade today below the 50-day. I mean, it looks, you can almost overlay corn and soybean and crude oil chart on top of each other, and you wouldn't be able to tell which one's which if you took the price out. So they're making similar moves. That's all related to currencies and everything else too. So I think with everything kind of turning down with harvest pressure, it makes sense to be doing what we're doing the last few days for sure.
It was interesting to see too. Dustin, maybe you could speak to this as open interest overnight. Corn was up 24,449 and beans were up 18,157. Funds selling it again. Is that an assumption you could make?
It could be, certainly. I think what we need to also remember is that the last couple of reports, we've seen an increase in open interest from commercials. So I think you're building, a lot of growers have kind of realized larger corn supply in particular. And so you just look at like this last COT report, producer merchant added another 43,000 fresh shorts and 8,000 fresh longs So even though you saw a massive reduction in open interest they had liquidated like 44,000 shorts of corn in that last report, your overall open interest actually increased just because we were opening new contracts on the producer merchant side. So I think it's the harvest pressure that you're building right now as people are adding contracts as they've added more supply.
Oh, makes sense. Anything else grain related, guys? I know there's not a whole bunch of fresh news out here this morning. I don't want to beat a dead horse, but anything else you want to add as we before we head into today's session?
Go ahead. Sorry.
Go ahead. Sorry.
No, go ahead, Dustin.
All right, I'll let Brian talk after this. But what I was going to say is that the spread narrowing yesterday was really kind of strange to see. And we talked about in the morning comments yesterday is like we're seeing a complete dry forecast still and a fall in the river levels. Again, another forecast calling for lower. Today we're at minus 6.6 in Memphis. And, the low threshold is -5. So we're already there and trending lower and have a dry 2-week forecast. And we're seeing strength in the D-Smart spread. So unless we're going to start seeing some major surprises on like weekly export sales reports, like new buyers coming in that we're not really projecting, it is interesting to see this. It's like there's some sort of weird trade happening. And you got to kind of listen to what the market's telling you, but also at the same time, like, look for confirmation of that in the weekly sales reports. Find out what that's about. So
that's a good point. Brian, what do you got for us?
No, I was just going to add a little bit on the weed side of things too. Add on what Ben was saying yesterday. Russia's production down with the dryness over there in the Black Sea region, and then France's farm industry came out with their 24 wheat production lowest since 1986. So it's just an outlier out there. Just kind of keep an eye on. Worldwide wheat stocks are very tight. So there's just something to continue to keep an eye on for you guys.
Now Mexico's buying. So
and Mexico's buying. How about that?
This is. Oh, go ahead, Jay. Sorry.
No, I said we'll take it. Yeah.
Yeah.
Right.
No doubt. This is interesting. So we AgYield War Room has gone global here. We got Bourbon Brown Trade Management and Asset Management from Brazil. Says good morning. They also have a question for us, guys. Any idea why meal is not going down as strong as beans? Maybe you guys got a meal opinion or thoughts here this morning?
You're saying, I would say the oil share has been really, really weird. And with that recent drop in crude oil the last couple of days, we've seen crush margins hold, elevated. They've been dropping a little bit. But, oil share has just been simply dropping. So I think like the minute you start tilting that scale and crude oil has really been kind of leading oil share here, you see a 3-day drop like we just had. It's going to just be a simple drop in oil share, and that position shift might be part of why meal's been supported.
Yeah, Jace, anything to piggyback on your meal opinion here? It's been an interesting trade.
Yeah, no, I don't. Outside of large fundamentals and meal, production just from crush capacity expansion. I don't have any short-term kind of, why the moves are happening right now. So I guess I'm a long-term bear of soybean meal, but that's been a tough trade. It's been a tough trade for a while, so I've been avoiding it.
Yeah. And if you take, if you take a look at that question, I think that this gentleman, first of all, awesome that you're tuning in from Brazil. That's really cool. We're happy you're on. But I think there's a lot of people are sharing that sentiment, right? We're crushing so many beans. We're looking at NOPA today that's going to be out at 11. They're looking for like 170.3. That would be another big number. So the thought is we're crushing, we're getting all this meal. What's the market telling us that it's not necessarily falling apart like a lot of people thought?
Well, I would say it is really falling apart though too. I mean, oil share increased in the month of October.
Dustin, maybe share what you mean by that for some folks there. When
so just
oil share.
Soybean oil's percent of revenue, right, out of crush, and so, historically, like we have to go back a long time to get as elevated as oil share levels as we've had in the last couple of years. And most of that's been renewable diesel, incentives in the US. That's kind of tailored back a little bit because we've been importing all of this used cooking oil recently. But we did hit 50% here not too long ago for the first time in decades. But, you just go back over the last 10 years prior to the renewable diesel movement and, being in the low 30s oils percent of crush, right? Crush margin is not uncommon. Meal has been a lot stronger. We've been seeing a little bit of meal boost in part because of, the deforestation regulation and this push, 12-month kind of punt on that regulation that they're proposing, I think caused a big portion of this oil share increase. And also the fact that crude oil led that huge short cover and rebound, oil share went right with it. So oil share went from its low in September was like 37% for the nearby. We got up over 40% recently. Just in the last 3 days, it's kind of taken a back seat where meal's been somewhat supported and oil has been falling. And that's with that 3-day push on crude oil. So I think that it's one of those pairs that trends so well that meal strength may be more related to oil weakness than it has anything to do with meal, just where that money is flowing. But otherwise, meal's had a 10% break off the start of where we were in October. So that's been a fairly substantial break still. Maybe it's just recovering some of that too.
No, that's good stuff. Anything else to add here on the grain side, guys? Once again, thanks to Bourbon Brown, Trade Management and Asset Management for tuning in this morning from Brazil. It's pretty cool. One last thought there from our friends in Brazil. Says, my main doubt is regarding the use of meal. World inflation plus China economy going down. Where is the feed going? It will not go for food, I guess.
Yeah, I'm long meal puts, right? Or like for
full disclosure.
I like that thought. I think that the increased crush capacity that we're going to see over the next couple of years in the U.S. Is something that you're kind of wondering, like, what are we going to do with all this meal, right? Especially if we're starting to, provide the legislation to not be using, imported, used cooking oil for some of these subsidies. So at some point, crush margins are going to be doing a lot of work. Soybean oil prices will have to do a lot of work to continue to incentivize crush margins because meal will start to fall. That's the thought process behind it. When you add 600 million, 700 million bushels of crush capacity over a very short period of time. But the resilience of meal has, I think, continued to surprise a lot of people. So maybe it's just going to take longer than we expect.
Yeah, and it's a good segue too. When you're talking about meal, Ryland, talk a little bit about maybe, the potential for hog expansion, right? Where are we going to feed this meal from a consumption standpoint? We could also segue too right into livestock. Mixed start to the week with choice beef, another $2 higher. So
yeah, beef's been on a tear. There's no question about it. It's a little bit of mixed trade yesterday. We haven't seen any real cash indication yet on the cattle side of things, but the seasonal is definitely on the bullish side right now, just pretty much between now and Thanksgiving. So I think at this point, there's still a lot of optimism here. There's no question. Everybody's a little nervous with the market just continuing to go up. Big move in the beef, a relatively kind of steady kind of grind higher in cash. So we'll see how it shapes up. I think everybody's worried to see the slaughter start to get pared back a little bit here, if that's going to bleed into this at all. So I think that's something to keep an eye on. I think it's just a market that everybody wants to look to protect, but open interest was up another 3,200 contracts yesterday. So we'll see if that continues. Just waiting to see what cash does at this point. But yeah, as far as it goes, the hog market has been on a tear lately. It's absolutely been rocking and rolling, but we did see a little bit of liquidation yesterday. October went off the board right around 84, and now we've got these hogs at 75. So it's not typically out of line with what we would normally see, in terms of historical standards, but it just feels like the managed money and everybody wants to stay long in the hog market. And I mean, just kind of anecdotally, just on the meal side of things, it just kind of feels like China's kind of doing whatever it can to kind of stabilize their market. I don't think they want prices to go much lower. So it seems like that could be a little bit of a throttling of demand, at least on the hog ration side for them. So we'll see, how that shapes up. I think overall the market was really disappointed just without a lot of clarity from China and how this stimulus is going to get distributed, especially in the ag sector, on the pork sector. I mean, these are big, these are big sectors and big talking points, that people were betting pretty huge on, and we really just didn't get, I think, what we wanted to see out of anything. So overall, I think that's a good question. It's one to keep an eye on, as we go forward.
Oh, very good. We appreciate the update there, Ron. Just came into the open here. We got December corn down 2.5 at 405 3/4. November soybeans are down 8 cents now at 988. And December Chicago wheat's down 3 3/4 at 581.5. A couple of things to point out. We will have NOPA out at 11 o'clock Central this morning. Once again, estimates looking for 170.3. We'll take a look at that. It'll be in the afternoon write-ups, and we'll talk about that tomorrow morning. Also, our grower harvest segment, we're going to have a special guest on. It will not be tomorrow, which is usually Wednesdays. It's going to be Thursday this week, but we will have that special grower edition this Thursday. We're excited. We've got a great guest that's going to come on and talk about sort of how harvest is going out west. So this will be good. Be sure to tune in. Also, we're going to get crop progress and conditions here, 3 o'clock Central this afternoon. So we'll take a look at that and have that update then tomorrow morning. We appreciate everybody tuning in. It was really cool to see somebody from Brazil this morning. So this thing's really getting around. But we'd appreciate it if you wouldn't mind giving us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to speed with everything AgYield. So once again, thanks to everybody that tunes in on a daily basis. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a great conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.